Up in the green above 18,600. So it's a good time then to welcome on board Mr. Vinod Karki. He's the head of strategy at ICICI Securities, joining us on the show. Vinod, hi, thank you so much for making time and speaking with us. Well, I was reading your latest strategy note, and it seems like you believe that the upside as far as the Indian markets go is capped. We are just looking at a 7 to 8% return on Nifty with a target of 20,000. Explain to me the rationale.
Yeah, hi. See, if you see the market in March, when the risk appetite really fell, had slipped down to almost 17,000 below that level. So from then, there, if you see the upside, if you take up till 20,000, it's quite decent. What has happened is in a matter of month or so, markets have risen quite fast. So that's the thing, basically. The point we are making is that even after this sharp rally, we still see upsides to the market, although moderate upsides, which doesn't mean that at a broader stock level or individual sector level, you won't find outperformance. But from a broader index level, given the valuation and the run-up that we have seen so far, it's difficult to see very high returns currently. So that's the thing, basically. The point we are making is that we don't see major risk of a drawdown in the market right now.
So there's more, cues are more tilted towards the upside rather than downside. That's the key message. And we have seen a decent amount of run-up from the bottom of the year. But wanted to get a sense from you that the last 6 to 12 months have been about sector rotation, and within the sector as well, how the companies and the leadership has changed. Going forward for the next 6 to 12 months, which are the sectors that you think will lead the rally now?
Yeah, so all along, actually, post-pandemic recovery in the economy and also in the stocks, we have seen that the sectors which are more related to the investment cycle, the credit cycle, the cyclical recovery from pandemic lows in terms of discretionary consumption where savings picked up. I think these are the sectors which are clearly leading the rally, not only, in the economic recovery, but in the stock market also. It's reflecting in the stock market. So I think that is going to continue for some more time, especially because we have been seeing that the gross fixed capital formation, the credit growth, that's leading the overall GDP expansion in the economy. So these sectors, which I just talked about, get a benefit when the economic revival is through this route. So I think all the capital-intensive sectors, be it in the utility sector, be it in engineering, capital goods, they will continue to do well, while the credit cycle, which we are seeing the initial stages of revival, that will also continue to be positive in my view.
Let me drill it down to stock specific and get more, get more information from you if I can. I see your top picks, and of course, there are a whole host of sectors, right from financials to consumption to building material, etc. But I wanted to specifically pick up Jubilant FoodWorks and Zomato, which is part of your top picks. Explain to us what's the rationale, what kind of upside you envisage?
Yeah, so I think our stock analysts will be better equipped to answer those questions. But as I said, from a top-down perspective, looking at from macro strategy perspective, we are finding that the discretionary consumption space is continuing to be quite good. And Zomato is more of an internet company, so it's more to do with investors finally, seeing that profitability, the focus on profitability by these companies will result in, the valuations after the corrections looking much better than they were earlier. So internet companies have their own issues where the investor community needs to get confidence on the profitability of these companies. And some of them are giving a path to profitability, which I think, and after the sharp correction, people are taking a positive view on these stocks. But broadly, I'm saying that the sectors that we talked about, which is investment-led, credit-led, discretionary consumption. These are the spaces from a macro strategy perspective that we like.
Sure, let's talk about that investment-led credit growth that you're pointing out to. Would you limit yourself to the top private and public sector banking names, or is it now time to perhaps look into the mid-tier banks as well, the ones which are the re-rating candidates or turnaround stories per se?
Yeah, so that's what in this report, if you see, what we have mentioned is that as the bull market picks up, what will happen is that the early leaders, which will be the large caps, even in the banking system, slowly the risk appetite towards the riskier, smaller banks will start to rise. And that is where one has to be a little careful, because once you enter a bull market environment, the discretion of investors starts to dip. They start to distinguish lesser between good quality and bad quality company. And that is where the real risk in investments arise during a bull market. So that needs to be really, one needs to be now more careful than they were earlier when index levels were in the margin of safety was higher. Then current situation and going forward, as market prices keep rising, the discretion towards better quality companies should be there, because everything will rise more or less in a bull market. That's the nature of a bull market.
Yes, need to be a bit more careful as to your stock picking. But Vinod, on that note, we let you go. Appreciate you joining us on the show today and talking to us about the outlook and strategy at ICICI Securities. But let's welcome on board another